Hi friends, how do you buy on dips? When should you buy on dips? When should you wait it out? When should you sell? So in today's video, I'll be talking about a super interesting concept called unjustified pessimism. And it comes actually from this book right here, The Intelligent Investors. So the last few years have given us a lot of opportunity to buy on dips because of geopolitical events. Think COVID-19 4 years ago, the Russia-Ukraine war 2 years ago, more recently inflation, and currently the Israel-Hamas war. So these geopolitical events give us what is known as unjustified pessimism. I don't advocate for any of these events. I think the world would be a better place without wars, etc. But that's a different topic. In terms of investing, these events do provide us opportunities to buy on dips. So how exactly does it work? Let's get into it. I want to start by defining unjustified pessimism. Again, this is a concept by Benjamin Graham, the author of Intelligent Investor. And he says that the market is a pendulum that forever swings between unsustainable optimism, which makes stocks too expensive, and unjustified pessimism, which makes stocks too cheap. The intelligent investor is a realist who sells to optimists and buys from pessimists. So the point Ben Graham is trying to make is that pessimism, in other words, bad news, negative stories, world events like wars, can temporarily make stocks really cheap. And those are the moments that a high quality business can provide an opportunity for us to buy on dips. Essentially, a stock might be worth 100 rupees and we can buy it for 50 or 75. So let's take a few examples and understand this concept a little deeper. I'm going to start with HUL. So now this stock was impacted because of the Russia-Ukraine war a couple of years ago, and also because of inflation. But HUL, if you look at its track record in terms of its fundamentals, its revenues, its earnings per share, and its track record over decades, it's a company with formidable moats, right? It has brands that are very recognizable. Think Red Label Tea, Quality Wall Ice Cream, Knorr Soup, and even Pepsodent toothpaste. So these are very well-established brands, and the war in Russia or inflation, as a consumer, you're not going to move away from Red Label Tea because the price goes up because of inflation. This is something that's part of your routine. It's something you consume, and it's a brand that you're very familiar with. So temporarily, yes, HUL can get hammered because of events like these. But in the long run, it'll continue to consistently compound. So that's a great example of a stock that's not going to be affected by events like these. So let's take a look at some other examples. You look at Titan. Titan was close to 800 when COVID happened, and today it's over at 3,000. Bajaj Finance, it fell to just under 2,000 levels, and today it's at 7,000. You look at Maruti, it was hovering around 4,000 during COVID, and now it's over 12,000. So these are high-quality businesses, blue-chip businesses that are not going to disappear over time. These examples provide you a solid list of companies that were hammered because of unjustified pessimism, and they've compounded in an incredible way just in 3 to 4 years. So if you had bought Titan, for instance, during the down of COVID, you would have 4x'd your money just in 3 to 4 years. So I hope you understood this concept. Let me take the flip side of this and when you should not buy on dips. So there are several reasons. So buying on dips, the market gets frenzy. People start talking about the news, and people want to buy on dips in a frantic way. So you shouldn't buy on dips if you haven't already studied the businesses that have crashed in recent times, right? You shouldn't buy on news, on bad news, and you shouldn't buy just because other people have told you you need to buy these stocks. if it's already been on your radar, so if you already studied a business like Titan, you understand it well, you understand its economic characteristics, you know it inside out, then you wait for opportunities like COVID, like the Russia-Ukraine war, like inflation, to see if there are any blue chip stocks that have gone down because of these events, and is there unjustified pessimism because of these kind of news. Buying on dips is also interesting because we tend to assume that because there's a dip, we're going to quickly get in and we're going to get out. And I never advocate for that. In my own personal journey, am I willing to take a long-term view even when I buy on a dip? I think that's a safer, wiser option because you don't want to flip stocks unless you're a trader, and we know that 99% of traders aren't successful. They don't actually make money trying to quickly flip stocks and make quick money. So that's not what I do. I tend to take a long-term view. Again, my learnings are from this book for this particular video, The Intelligent Investor. And Ben Graham talks about Mr. Market, which is an imaginary character he made up. And he says, Mr. Market creates ups and downs in stock prices all the time. And prudent investors are unfazed by them since they're looking at the larger long-term picture. So if I'm buying a stock like Titan on a dip, I ask myself, am I willing to hold this at least for 6 months? And even if there is no bounce back, am I comfortable holding it beyond 6 months, for 2 years, 3 years, 5 years? If the answer is yes, then I'll go ahead and buy on a dip. So hope you got the concept around unjustified pessimism. And if you like this video, please give it a like so others can learn. And I'll see you next time.